and welcome to our look at the Tuesday, August 26th trading session. In front of you I have the economic calendar, and the first thing that you should notice is that it's almost all US related. Asia and Europe really have nothing going on during the session, and the first number that really matters is durable goods orders for the month of July. Expected to come in at 8%. And as a result, that could be a catalyst if we get better than anticipated number to push a couple different markets. The first one we're looking at is the dollar CAD. We think the US dollar could break out above the Canadian dollar, as well as the euro breaking down against the US dollar, and this could be the catalyst. We have a bunch of minor announcements after that. The next thing that we really see of real significance would be consumer confidence, expected to come in at 89. Again, this could move the stock markets in America and the US dollar. We think it might be kind of quiet in Europe. This is going to be a very US-centric day. With that, let's take a look at a couple of the charts. The first market we bring to your attention is the euro dollar. You can see that we have been falling. We are below the 132 level now, and really at this point in time it's only a matter of time before we get to the 130 handle. We expect a little bit of support there, but quite frankly the real support's probably closer to the 1.28 handle, so we remain bearish. The European Central Bank should continue to look very accommodative. Draghi even said at Jackson Hole that he was thinking that if it's necessary they will do it. That's pretty much a green light that they are going to do some type of stimulus. Exactly what isn't known yet, but nonetheless it all means the same thing. It all means a weaker euro. That being the case, even if we rally from here, we look at this as a selling opportunity from higher levels. Looking at the S&P 500, we broke above 2,000 for the briefest of moments during the session on Monday. We think we will. It's only a matter of time. There's a significant amount of support right around the 1985 level or so. So a pullback with any signs of support is a buying opportunity. Again, though, those durable goods numbers could be enough to just throw us right over the 2,000 level. The level has been pierced. Generally, when you get that and you're with the trend, it will happen given enough time. Pullbacks offer value. A break above offers a buying opportunity and a potential leg higher. Looking at the pound dollar, you can see that we tried to rally. We ended up forming a shooting star. We have a hammer from the Friday session. So we really think that this is probably going to be more or less consolidation with a slight downward tilt. 165 seems to be supportive. So although the pound looks like it's probably going to drift a little bit lower, we think that it's probably run about as far as it's going to. And if you happen to look at the euro-pound pair, it certainly favors the pound over the euro. So although this looks like a sell, and it most certainly in a downtrend, we think that this market's probably oversold and is about to take a breather. And finally, looking at the FTSE, you can see that we fell during the session on Monday, Friday, excuse me, with Monday being closed due to the bank holiday. That being the case, we expect a little bit of support to show up here right around 67.50-ish or so. So we'll look to short-term charts as opportunities to pick up short-term binary contracts to the upside. Of course, if we break out above 6,800, we consider that broken out. And at that point in time, we'd actually consider going long for a little bit longer time period, as it should continue to move higher. Either way, though, the fact that we've gone sideways after this impulsive move generally is a good sign, especially considering that we formed a couple of hammers. And with that, we've taken a look at the Tuesday, August 26th trading session.